All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to be getting started here very shortly. I'm going to get started now. Not very shortly. I'm going to get started now. The reason I'm going to make it fairly quick today, I have an interview to do today, which is great for you guys. You guys are going to get a nice view and point of view in a video with Marc Sandler from Bach and Burn. So I'm excited to bring that to you, but that's going to happen in fairly short order. So I'm going to go through the analysis rather quickly, and then I'm going to pass it over to Steve and Stelios and see if those guys have anything that they want to mention to you before I conduct an interview. So let's first of all realize that stocks are bouncing this morning, but any move now back up to 4,100, 4,110. You got to look at it as a selling opportunity. Let's imagine this is a low and that's formed. So now high to low. Here's your low. 41.15 is resistance. Boom. I'd say we're in a range now or if we break back below this 39.60, that's going to be bearish. Support now is, let's just confirm something. Let's take this most recent low. Remember, we came out of a wedge. It's also something that we should pay attention to. It's a bearish wedge out of there. So we are at the 38% retracement. That's why this is so important. 40, 34. Do you guys see that? Okay. Bearish wedge, reversal. We came out of the wedge. We stopped at the 38% retracement. Does everybody see that? I just want to make sure everybody knows why we're stopping, where we're stopping. And that's what makes this is very, very important then. Okay, Gavin sees it. Good. Okay. So that's 40.35. And remember, that's a 38% retracement now. This has to hold, so I'm going to put that as asterisk. That's what's keeping us in range now. Let's go to the euro. So the euro, I was actually surprised it spiked up after the producer prices, but whatever, I think the euro's heavy. I think the euro, any move back to 120, what's the spike high right here? We're going to do the exact same thing that we just did with the S&P. So you can see this 38% retracement. That's basically this high right here. So it's 21. I'd give it all the way to 21.15 now. I'm going to keep us in range because now we have this here. Let's remove this. We don't need this anymore. Let's remove that. And this is as we can see it here, it's a false breakout. So that is now the near-term risk for the euro. This 618 is holding, so that makes this 120.50 really important support. And below that, we could see 119.90. You guys do remember why that's so important, right? It's right here. So below 120.50 opens the door for 119.90. You guys with me on that? Okay. Cable. What a big bounce from where it matters most. I know the thing about the cables always happens when I'm asleep, obviously in European trade, but that was big. So what that really means is $140. Really critical support. Resistance now. I would actually say very similar to the euro. The 50% comes in right at that spike low, basically. So I'm going to write down 140.85. It's not great resistance, but it's resistance. Aussie. I mean, that's obvious, right? I don't think there's more obvious support right now than right there. Because If we break 76.75, we are going to make a move for this head and shoulder neckline. Now, just so we're clear here, guys, this head and shoulder is still valid. It's not symmetrical. I always love it when it's symmetrical. It's always it's much cleaner, but that doesn't mean that it can't play out. It can. So 76.75, huge support this morning. Ange says gold and silver setting up on shorts backfill. Yeah, I think gold and silver can slide back to 1760 as far as I'm concerned. That in gold, but we'll talk about that here in a second. So let's just, I mean, this is resistance where we're at. Do you see this trend line right here? We're basically at it, but I'm going to get rid of that for now. I don't know where good resistance is for the Aussie to be. Okay, here, I guess we can go with this. So I'm gonna remove that here in a second. See the 38% retracement that comes in at 77.65. This low right here is 77.60. So I'm gonna go with 77.60 as being resistance today. I think if it gets up there, you better thank your lucky stars we got there. Have you guys? How many of you have heard the Greek gods before? Anybody ever hear the Greek gods? Anybody?
The original Greek gods or your Greek gods?
No, my Greek gods.
I think we've all had the experience.
No, I don't think everybody has. We got a lot of new traders now that are, you know, they've been around for less than a couple of years and they haven't heard it. Chad's like, oh, that sweet sound. Yeah, man. You know, if the Aussie like rallied back to, you know, the previous support right here, which should act as current resistance, I think you got to thank those Greek gods, and they sound a lot like this. Thank you for getting back to 77.60 for me to short it. Okay.
That's always funny every time.
No, it isn't. It's only funny to me. It's not funny to anybody else. It's only funny to me. I'm the only one, you know, obviously you guys are Greek, so you guys have been in, you know, Greek churches, but for me as an American, having to be baptized as a Greek Orthodox and then go to a Greek church and listen to the music for in a long period of time, I'm like, man, those guys got some vocal cords. You just go and they go and they go and they go.
Not exactly. Trust me, some of them are horrible. Oh, they are.
The ones I've heard have always been so impressive. I'm like, oh my God, listen to these guys. Anyway, it's always,
consider yourself lucky then.
I did that pretty good though, don't I?
Oh yeah.
Yeah, I'm pretty good. Anyway, I always think it's so cool, but you know, it also puts me to sleep. You know, when you go into some of those Greek Orthodox services, and 2 hours later, and I'm like almost passing out because I'm so tired. Anyway, all right, enough of that. We're not going to hear any more of the Greek gods unless they do hit 77.60 in the Aussie. Take the Kiwi. Kiwi support comes in really, really key here at 77.10. That's critical support, and any bounce now, kind of like the Aussie, if you can bounce back to like this previous support here, which would be 72, I think you got to use that as an opportunity to be on the short side. You know, if you can get a move like that, I just don't know if we're going to get it. Dollar CAD, let me get over there. Dollar CAD, this big hammer yesterday. I'm long, and obviously if you use if you use the patterns in play, you guys know I'm, turned bullish in this yesterday. Above 22 would be really bullish because then you're going to trap so many shorts, but that should be resistance today. If you think about this now, if we dip down below 121, you're going to find buyers down there because there's people that are short that are like, no, I don't want to be short anymore. Not this close. So any dip down to 120.80 should find buyers now. Resistance 122. I think it's still bearish while we're below 122. So, just so we're clear, I think we need to get back above or back into this channel to really take the downside pressure off. I mean, we can't ignore the fact that this is a pretty bearish move. But we get back above 122, and that's going to immediately, in my opinion, relieve the pressure off of the shorts. Swissy, as I mentioned yesterday, I think we need to get above 91 cents to turn bullish. Just remember, this is the 200-day moving average right here. So let's make sure we take out the 91 cent level. Support probably back here at, I'd say there's some 50% retracement back here, but I would just say 90 is probably really good support. 91 is resistance. Let's treat it as a range right now. We get above 91, and that might take some downside pressure off, and maybe even get a little squeeze because of yields moving higher. U.S. dollar, Norwegian krona. Now this is big. We are outside of this wedge, and so that's why I put in a pattern in play today. I started building along here, and I think while we're above 835. This turns bullish. And I know it's like, wow, we've been beat down for quite some time, but this inverted head and shoulder pattern as it is points to 860. So remember, it's because it came out of a wedge, not because it broke resistance. It came out of a wedge today, a bearish or a descending wedge. Dollar Mexican peso would, you can see this previous support here, but that's, pretty big support. And actually you could just do this from all the way over here. Just go like that, right? So we really have to get above 2035, but we get above 2035, we can actually turn bullish here. So we're not going to do that yet. This is a big range until proven otherwise. But remember, the dollar Mexican peso is making and continues to forge higher lows. All right. And even though I bought some yesterday, I'm not completely convinced until we get above like 2035. Dollar yen, very strong move up to the 618. We had written as resistance 109.65 yesterday. Guess what? If we break 109.80, that might open the door for more upside. Now, and this is a big bounce yesterday. Dips back down to 109 should find buyers. I'm going to keep us in range for now. Dollar index, downtrend line. You see how important this downtrend line is? That means today's high is really important, right there. Because we'll come back to this if we get up there. This is the descending trend line. Right there. So that is 90.90. I'm going to keep us in range for now, and we got to stay that way unless we get a break above that 90.90. But support we should be really well supported through here. This comes in at 90.50. Actually, it's 90.45. Previous low, resistance, should be support on the way down. So I'm going to write down just 90.40 to keep it easy. For taking into account overshoots, dollar index, we just did. S&P, we know. Gold and silver. Here we go. Becky said wrong support. Did I write wrong support level? Support 90.40. Which one are you talking about, Becky? Oh, New Zealand. Okay. Thank you. Did I? Oh, 71.10. Thank you. Let me just double check that. Thank you. Thank you. Stelios is not here to catch my mistakes. 71.10. And Steve is not paying attention to a word I said or saying.
How did you know?
Huh? What?
How did you know?
All right. Hold on. Let me I'll just finish this up, guys, or Steve. So 1800 is really big support, as we've discussed. Now, probably if you take this low from here, you'll notice that that trend line intersects with the horizontal support. So that's what makes this really important. Okay. 1800. You know, as long as we're above that, I think you're fine with playing, you know, but like both sides. I'm going to write down 1845 as resistance, but just you got to be a little careful now. I think you play both sides. You get below 1800, and you know we might be in for a little bit of a sell-off. And this is the same thing here. Intersection of resistance. You guys see that? Resistance is the silver. Ascending trend line, that all comes in at 2660. We break through that, and you know you're gonna probably get some accelerated selling back down to 2550 or so. So, and think about that, because if that happens, you know, what happens to you know, the dollar in that case? Well, if gold and silver are breaking down, then it's probably means the dollar's firming. So just think about that. 2660. Resistance is, you know, obviously a 618 here. Oops. So, all right, just down 27. I think what we did 2785 yesterday. Yep. Bitcoin. We're finding buyers here, but what happens if we break back below 47,000? Well, I think that's going to be kind of dangerous. And let's take this and drop that here, because you know how we'd been monitoring 52,400. Guess what? That should be resistance on the way up. So I'm going to write down 47,000 is support, roughly, right? 47 support. And I think it's key, because you just got to think that it's around there, right? That's why I put the X's, because I think it, you know, we could get slightly below it. We can be slightly above it. You know, it's going to be somewhere around here. We get below it and we start like holding below it, then you have to be really careful. Okay. Resistance, 52,400. That was support before. and we are threatening to turn bearish. But for now, we're in a range. All right, I'm going to leave it with you. With that, I'm going to allow Steve and Stelios to go over some analysis with you guys. I'm going to have an interview in about 30 minutes with Marc Sandler, so I need to go get ready for that. You guys have a great trading day. I'll see you in the chat rooms. Thanks, everybody. Have a great one. And Amira, hey, stay safe there in Israel. All right.
Thanks, Blake.
Thank you, Blake. Bye, mate.
So, yeah, so, we had 3 down days in a row in indices. Now we're bouncing. We're seeing what's happening. This is on the back of the inflation print, and PPI came in higher today. So the risk is, or the danger for markets is that we see higher yields. And clearly the markets don't like that, especially like not growth stocks, like tech stocks and all these highly leveraged.
Speaking of yields, Stelio, both the 10 and the 30-year have broken out from the equivalent consolidations. Here is the 10-year, and here's the 30-year.
Yeah, and the Bund is also continuing.
And the Bund, as we said, this formation looked really bearish, so it seems to have sliced through support. We talked about how the dangers are tilted for a breakdown from there, and I think this is what we're seeing.
Now the question is, how, as you very correctly put it, what does the Fed do? Can they tighten? Can they do anything? I was listening to Peter Schiff's podcast from a few hours ago, and he was saying exactly the same thing. He said, look, they obviously want to do something, but they just can't do anything. So they're going to let, he actually said they can let inflation run at 6% and still not do anything. And, that's shocking to hear.
I think that's a little bit of an exaggeration, because if the official print comes to 6%.
Yeah, the real one is like 15. Yeah.
Yeah, and the real one is going to be that kind of a number that even people that, don't really have much of an understanding will strongly feel it. You know what I mean?
Yeah.
So there's going to be a lot of pressure for something to happen.
Yes, but it goes without saying that low rates, low yields are something that the government needs, the treasury needs, and corporations need. So apart from banks want a nice.
Corporations, of course, need them because of what the latter do, meaning the Federal Reserve, the central banks in general, and the governments have been doing. Because what they've been doing more prominently during the past 13 years has in essence pushed corporations in leveraging up themselves as well.
Yes.
Right.
Yes.
So even the corporation problem is a symptom of the general disease that's erupted since monetary policy became completely reckless.
Yeah. Yes. So let's see what happens, and let's see how the Fed reacts. And what else?
The interview, somebody's asking, Chad is asking about the interview with Marc Sandler. That's not going to be live. That's going to be for Trader Summit, and it's going to be posted later today on the Trader Summit website.
Yeah.
So Blake is going to conduct it now, and a few hours later it's going to be posted on tradersummit.net.
Yeah. Anyway, let's have a look at some markets. Metals were lower this morning, again on the PVI print, but they're kind of recovering as risk is rallying. So, for me, the big picture still hasn't changed massively. I need to see.
The market participants are stupid enough to perhaps, as I said, react in the wrong way in this case, which is going to be good for us, meaning they might be foolish enough to really believe that the Fed is going to, because the Fed eventually reacting is not what's important here, right? Important is if the Fed is going to try to get ahead of the curve. My answer to that is absolutely not. They're already behind, and in my opinion, they're going to be left even further behind.
Yeah.
Right. So if the Fed eventually is going to react, is completely without meaning, having to do with what precious metals should be doing. It's just if they're going to be reacting in analogy to what's happening, and they won't.
And they've told us
So,
already that they're going to wait
of
for
course
the
they have, and
asymmetrical.
as I've said, it's one of the
yeah.
few times I believe them.
Yeah, true.
Yeah, so I'm crossing my fingers that investors are going to be for a short period of time foolish enough to believe that hikes are coming, tightening is coming, tapering is coming, and all that. And of course, the initial reaction to that should be a continuation of what we saw yesterday, which is going to be like selling off, precious metals, etc., until they realize, which isn't going to take long, trust me, that that was a false assumption. In which case, we should see the next massive leg higher beginning.
Yep, I'm with you on that. Okay, let's have a look at maybe some questions, or if you have something that you want to show in particular.
I have a couple of things I want to show. One of them is because it's also interesting. We were in a juncture in the S&P. We had talked about it. We were also in a juncture in the crude oil market, and more or less we still are. Keep in mind that if we see this souring of risk appetite resume, given the inflation trigger for several days or even a few weeks, it's very unlikely that crude is going to manage to break higher. Although, admittedly, crude is, if we are under a risk-off environment, crude is going to be pulled in opposite directions from two opposing forces. One of them being the inflationary pressures, the other one being that as a general thesis, risk appetite increases demand for crude oil. So, admittedly, I don't think that crude oil is going to be the right proxy play for risk off, for the reason I said, because we also have high inflation, which is exponentially increasing. I'm just saying, so I'm not suggesting that somebody should short it here, although from a risk reward perspective, as you see, being so close to resistance, it would make sense. But I think there are better proxies if you want to play the risk off and you don't want to do it directly through an index. But all I'm saying is that I think there is a danger for crude oil to move to the downside within this larger consolidation before it can break higher. So other things might have broken out, but crude oil might need more time before it actually manages to do so.
Steve, before you continue, when is Blake's interview? Is it at the top of the hour? Or is it
yes, correct. It is at the top of the hour.
We have just about 10 minutes, basically. We want to give him a couple of minutes.
Yeah, okay. We have a little bit more than 10 minutes. Yes, so I'm going to try to be brief.
No problem.
Nickel, the nickel market got also rejected. If you remember, I kept saying how important this support resistance area was. It was in essence a pivot. We got a nice rejection from there, and this leaves open the door for my initial idea of how that would play out, meaning one more leg lower before higher. So, I wouldn't be long the nickel market here either. Now, would they play it in the short side? No, and they've explained the reasons multiple times. I don't want to be short anything that has intrinsic value, anything that has scarcity. But let me be very clear here. Something having scarcity doesn't necessarily mean that it has value, but something that has both scarcity and value under current market conditions should keep appreciating. I'm saying that, and I make the I specify what I mean, because somebody can claim that all these shitcoins have scarcity as well. But speaking of which, Stelio, you know that the number of cryptocurrencies has now almost reached 10,000.
Nice, but there is limited supply, right?
Yes, it's 9,600 and something like yesterday that I checked out of curiosity. I remember myself saying, and it wasn't much more than a year ago, that they were 3,000. So in, what is it, like a year, worst case scenario, 1.5 years, they've tripled to almost 10,000. So yeah, everybody that creates a cryptocurrency has a claim that I'm offering something that's scarce because, for example, I offer mouse coin that has only 5 million units, but there is also the cat coin, the dog coin, the elephant coin, the giraffe coin, and I don't know what else they're going to come up with. So keep that in mind. Now, let me go through some of the
giraffe coin. I like that. We should make that.
Why not? I mean, why not? Under current conditions, it might sell like crazy. Does the risk continue to rally following the PPI? Listen, theoretically speaking, no. It would make sense, which we don't see depicted in price action since we got the data, because we've had a recovery here, but I'm going to explain my thesis here. It would make sense that if the market was scared from the inflation print yesterday, the market is going to be extra scared from the PPI today, because the PPI in essence validates what we saw in inflation, and not only validates it, but also hints that upcoming CPI prints are going to be strong as well. So if logic prevails, which is a huge if under current market conditions, if yesterday's CPI print is negative for risk, today's PPI print is equally negative for risk. Because as we've said multiple times, PPI is a leading indicator to CPI. It has a lag, but it's leading the CPI. So, if the market wants to take the same type of data in the same type of way within 24 hours.
I wouldn't try too hard to explain.
Yes, me too. That's why I'm laughing while I'm saying it, because
no consistency.
There's no consistency. There is consistency, actually, Stelio. We're both wrong about that. There is consistency in that this bubble-driven market always tries to find a positive spin about anything. It might take it a couple of days. It might take it a couple of Fed governors' statements or interviews. You know what I mean? But they're going to try to find a positive spin about it.
Yeah.
Now, speaking about the S&P specifically and the recovery we've been seeing so far today, I have to say here that we stressed multiple times the importance of 4110 and 4115 during the past week and this week. And yesterday, it's not by accident that once we sliced through it, we continued moving higher without, in essence, stopping, and we closed at the lows of the day. Now, as you very well know, that also implies that the same important support resistance area should act as a resistance as we approach it now. So from a risk reward perspective and looking at the shorter term charts, for example, let's bring the 4-hour chart here, that would imply that a revisit of this area has a very high chance of producing a decent sell-off, right? So keep that in mind. And the continuation lower, at least in the short to medium term, right? So I think that there is a very good argument to be made why a rally towards 4110 to 4130 is a good risk reward opportunity to be short for at least one more leg lower. So keep that in mind. So that's my general thesis about where I think a risk might be heading towards the next few days. I do think that most likely we're going to see some follow through to what started yesterday. The market was anyhow looking for some type of an excuse to get somewhat scared and, in essence, alleviate the extreme overbought conditions. So we might have already got it. The inflation prints that create a scare that the punch bowl might go away sooner rather than later. As I've said, I think this is the wrong thesis to have, but that doesn't mean that the market cannot follow the wrong thesis for a decent period of time. So, that's what I think about it. Okay, we have another 5 minutes, so I'm going to go through some questions. There is some questions about the Kiwi, so we might as well have a look at the Kiwi. And I anyhow wanted to talk both about the Kiwi and the Aussie. Why? Because we have this type of formations. Here's the Aussie, and here's the Kiwi. You see how similar they are, and they both imply that if we break lower from here, yes, I still believe the move lower is corrective, I very strongly believe it, but we might need one more leg lower before we can resume to the upside, right? So one more leg lower if we break through this before we resume to the upside. So keep that in mind. And it's not also by accident, and I'm going to finish with this and then, just go over a couple of questions. It's not by accident that if you check the DXY, look at this descending channel here in the DXY. If you check the DXY and you also check the S&P, you'll see that they're almost at the lows of the day, which was an hour ago when I was looking at it. Again, they were both more or less equally close to a breakout in the case of the DXY, breakdown in the case of the S&P. We know that the inverse relationship is going to reassert itself for a period of time. I'm not expecting any fireworks for the dollar, but the inverse relationship will reassert itself for a limited number of days, might even be a few weeks, if we get some risk off, right? And yesterday, we definitely, after a long period of time, had a strong risk off day, not only defined by the range of the day, but by the fact that they didn't even manage to salvage stocks near the end of the day. And we very well know how they miraculously pull this off every time, right? How many times we've seen a day that looks bad, and during the past hour of the day, during the last hour of the day, there is this invisible bid coming through the markets and rescuing them from having a really negative close. Yesterday, they didn't even manage to do that. We closed at the lows of the day. Not a good sign, right? So I don't really trust this pre-market rebound we're seeing at the moment, especially given the PPI print. So although you know that I like to follow the trend, I think looking at the short-term charts, I think this move higher has a very, very good likelihood to be sold. Canadian INR, sure. Let's have a look at it. CAD INR.
I'm guessing somebody who's Indian and living in Canada.
Might be the case. Might be the case. What can I tell you? It does look bullish. Before we go to the Canadian INR, we can start from having a look at the USD INR, and I'll explain why. Let me pull it up here. There it is. So USD INR, we had the break higher from this important trend line resistance, and now we've pulled back to retest this area. Although in the short term, I have to admit that it looks more like it's building a bear flag than anything else. So I would be a little bit skeptical here. Who knows? Because this is not a very easy formation to really analyze. You can see, I mean, multiple interpretations. It's some type of a corrective formation, might be a bigger corrective formation like the red one I just created, in which case we might have more weakness here before we have more strength, something like this. Okay. Now that we went through that, back to the Canadian INR, clearly it's been in a massive uptrend. Look at this. We found a low when risk assets bottomed last year, obviously not coincidentally, right? And we know the relationship between CAD and the VIX. We've talked about it multiple times in the past. So we found a bottom there, and we've been rallying since. And we've seen the rally unabated so far, but I have to tell you that I would start being a little bit careful here, because we might have started building some kind of a little topping pattern in combination with the RSI divergence that we have, right? So,
Steve, we have to wrap it
I know it. So we might have to pull back to this area, before continuing higher.
All right. Thank you. Thank you, everybody.
We'll have a look at the rest tomorrow, guys. Girls.
Thank you.
Bye-bye.
Bye-bye.